The instant asset write-off will see some major changes come 1st of July 2023. While there'll be plenty of articles in the media about this, many won't tell you the actual truth behind this. In today's video, I'm going to be telling you what these changes actually mean for small business owners. In the 2023 Australian federal budget, they announced that the instant asset write-off will have a $20,000 limit for the financial year ending 30th June 2024. So this means that from 1st of July 2023 until 30th of June 2024, you'll be able to instantly write off any assets up to $20,000. Now this $20,000 limit actually first came in back in May 2015. Now this has seen a number of changes over the years, as you'll see here, and especially during the COVID period, they even brought in things that sat above the instant asset write-off like temporary full expensing. And this is the method that most people have been using and will keep using up until 30th of June 2023. Now the temporary full expensing method pretty much allowed an unlimited deduction for assets that were purchased by a small business. So even though the $20,000 limit is being promoted as really a positive thing, it is a major downgrade from our current rules. This is why you need to be careful when anything is ever announced in the budget, because obviously the current government is going to try and put a positive spin on that. A lot of the media don't really understand what the actual ramifications are, so you need to make sure you go and speak to an accountant about it, or make sure you're doing your own research to really understand, are these changes actually positive? So in essence, the major change is going from the temporary full expensing method, where we've got an unlimited deduction, down to a $20,000 limit on assets. And the best way for me to try and explain this is through an example. So if we go and buy a $40,000 car before 30th of June this year, it'll fall under the temporary full expensing method. Now we're assuming this car is 100% being used for business, and therefore it can be instantly written off under this method. So this means we're going to get a $40,000 tax deduction. Now if we use the average rate of 34.5 cents, our tax benefit to this is going to be $13,800. And this will happen to us in the financial year that it's just happened. So, if you go and buy that asset in June, and then you'll go and lodge your tax return in July, it's pretty quick to get that benefit. And that benefit is quite a large chunk of the actual purchase. It's a whole third. And especially if you've gone and financed that car, this could provide a nice little cash flow boost to your business. Now, under the new rules, this asset will likely be pooled in what they call the small business pool. And assets that go into the small business pool fall under two different rates. So in the first year, they get claimed at 15%, and then in future years, it's 30% of the balance. So if we go and buy this $40,000 car in August 2023, when these new rules come in, it's over the $20,000 limit. So we can't use the instant asset write-off. So we pull the asset, and it means we get a 15% tax deduction in the first year. So our tax deduction in the first year is only $6,000. Now, if we assume that 34.5 cent rate, it's about a $2,070 tax saving. So the difference between what the rules are currently compared to the future for this $40,000 asset is a difference in tax rating of $11,730. So this is over 25% of the purchase price in difference in tax savings in year one. Now, we definitely will still be able to claim that car in future years, so we are going to spread out that $40,000 deduction over a number of years. But the advantage of the current rules is we're bringing all of that into the current year, and we're getting to claim that tax deduction straight away, and therefore getting the tax benefit straight away. This is opening up more cash flow for our business to allow us to make more investment decisions, or maybe it's to be able to bring out some more money to live off personally. So these changes aren't going to impact the overall claim over the lifetime of the asset, but they're definitely going to impact when the asset is claimed. Now, one of the advantages to the new rules is it does mean your depreciation will be spread out, which has definitely impacted clients. I've definitely seen that where clients have been instantly writing off assets, and therefore in a year when they don't purchase any new assets, it means they've got no carried forward depreciation because they've already used it in the prior years. So this will be good to allow people to have depreciation in years even when they haven't had a cash flow output to purchase assets, because they might be still depreciating the asset from a few years ago. But in general, it does mean that your deductions are going to be pushed out further for those larger assets, and you're not going to get those instant write-offs. This will definitely impact people when they're looking at tax planning strategies, and it's conversations I've already started to have with clients, because we've had this expectation for a while that the temporary full expensing is definitely going to end, and that the new instant asset write-off rules were going to be much less, which is what has played out. So we're definitely going to see a big rush in people looking to purchase assets before 30th of June 2023, because it will be the last time that they can take advantage of this kind of unlimited asset limit. So at this stage, the $20,000 limit has only been announced from 1st of July 2023 to 30th of June 2024. Now, this is what they were doing in the pre-COVID years. They would give you 12 months of extension on it. They keep doing this. I'd really love to see a government either come in and permanently say, yeah, we're going to keep the $20,000 limit indefinitely, or they're going to come up with a new limit that's going to be an indefinite, not this continue, we're going to put in $20,000 for next year and make it sound really good. Let's just put a permanent limit in place so that everyone knows what's going on in the future. Now, there's definitely more strategies than just buying assets when it comes to tax planning. And this upcoming video I've got talks about the benefits of tax planning and how you can implement it for your small business. I'd love for you to go and check it out.